I want to ask you, Jake, around the commercial property. What sort of investors or owners are you seeing that are in commercial? Are they just have a large commercial portfolio, or do you see people that move from resi, build a portfolio, and finally get to the stage of now I can afford that deposit for a commercial deal? Do you see much of that at all? And if so, like, where in their property journey do they sort of might make their first commercial acquisition?
Yeah, like I'm not as connected to that part of because I'm not necessarily directly acting as a BA. I don't always get the backstory on the deals, but as a general observation, kind of the new dynamic that I've seen in the last couple of years is obviously with the rise of the buyer's agency space, the fact that there's a lot of content and information out there. I think people are starting to wake up to the edge that commercial property investing have, or the positive differences compared to residential property. I think Australians, we love residential property, and for the longest time the narrative has just been buy a house, buy the next one. It's just commercial property hasn't even been on people's radars.
Yeah.
But I think there is a growing awareness that it is a good option. Obviously, the needing a bigger deposit, there's sort of more barriers to entry. The education piece as well, there's a lot more moving parts. It's harder to understand. But generally speaking, definitely seeing people buying assets, like, your mum and dad investors buying something in their super fund, or, a younger person, who might own a couple of houses now looking at a small entry level industrial unit for 500 grand. That's definitely, there seems to be sort of a rise in that space. And quite a few vals across my desk where there's, a contract in play and a buyer's agent has sort of been involved in the deal, which is, that's kind of a new dynamic over the last couple of years, and seeing, interstate money in the local market.
Yeah, that's the rise of the buyer's agent, right? Like, coming out of us being valuers and then me changing into this space, and obviously the work that I'm doing at the moment, there is a lot of unperceived risk there for a lot of retail investors trusting people with, their own money, right? Like, I've seen a number of examples where I was going to say hundreds, but probably more like your 50 to 80 examples in my time of buyer's agents not actually, doing the role that they're essentially being paid to do, which is have their client's best interest at heart. Do you have any examples that you've seen come across your desk where, just to, I guess, educate people on, it's your money at the end of the day, the buck stops with you, so you need to get educated and then work with your buyer's agent, not just trust them to do the best thing for you.
Yeah, I think super important to have a base level of understanding yourself, just because, I'm not trying to say all buyer's agents are negligent or not trying to do the right thing, but ultimately there is a bit of a sometimes can be a conflict of interest where a buyer's agent gets paid for the deal going through, so maybe they're not scrutinizing things as closely as they should.
Yeah.
And then you've got sales agents that are trying to talk up the property, or maybe put some of the obvious risks in the background. They're not, they're trying to make it seem as appealing as possible. So yeah, I think having an understanding yourself so that you can at least look at the deal a little bit critically too. An example of probably a pretty terrible deal that came across my desk was a little industrial unit in Mollendina. It was, I'm not going to say who the BA was, but it was a deal mediated by a buyer's agent, and I went out there, and it was a industrial unit, industrial area, industrial zoning, and it had fit out for a gin distillery and bar. So it extensive fit out, full little dining area. Yeah, like real specialized fit out. I was thinking, okay, this is interesting. And then looked online, and sure enough, there's no approvals for that particular use or the fit out. So there's kind of non-compliance risk with council if they rocked up and issued you a show cause notice. That tenant might not actually legally be able to run that business from there. So that's pretty risky for you. And then there was a lot of mezzanine accommodation, like a mezzanine level in this unit that, when I looked into it, wasn't approved either. And this is actually a pretty typical example of how people can overpay. Often an agent will include unapproved areas in the total area of the property. And if you're buying on a rate per square meter, it's pretty easy for that to get overstated. Yeah. But, you shouldn't pay full freight for a bit of the property that's unapproved, because again, if council really wanted to, they could tell you to rip it out. So this property had basically all those elements.